Okay, that's 5 p.m. Firstly, welcome everybody, and thank you very much for registering to our Frequently Asked Questions in Spain Part 2 webinar. This webinar is hosted by myself, Nicole Sandler, and my colleague, John Dyking, and we're both financial planners with Chase Buchanan, based here in Spain. Essentially, John and myself help create a strategic plan for people regarding their visas, logistics, and just overall timings when they're looking to move to Spain. And during that process, we are inundated with so many various questions. So this webinar is based on 10 frequently asked questions that we typically receive from these people moving to Spain regarding tax and their finances. These questions are actually really similar for people that we help who are already living here in Spain. And because of the commonality between the two questions, we thought we would answer and address both question and answers from both perspectives. We actually recently presented a webinar on this same topic about a month or so ago, and it was really well received. In fact, the British Chamber of Commerce here in Spain published an article based on the content that we did. So we thought we would compile another 10 set of questions because it seemed to have resonated and helped so many people. Between John and myself, we've worked with thousands of foreign nationals living in Spain and helped them move to Spain. John's been living here for 20 years now, based in the south of Spain in Malaga. I've been here for 9 years and I'm based in a town called Javier on the Costa Blanca. And really our primary focus is to help our clients live in Spain in the most tax efficient way. So it just gives them peace of mind for themselves and also for their families. And if anybody has any questions, you're very welcome to ask. There's a Q&A box in the top toolbar, and there's also a chat box. So whichever one you like, if you have any specific questions, you're very welcome to write the question in one of those boxes. And at the end, once we've finished the 10 question and answers, we'll have a look through and make sure we can answer any questions that people have. And the format will be that I will start by asking John the first 5 questions, and then he can return the favor and ask me the following 5 questions. Okay. So, John, question 1. For purposes of determining Spanish or UK tax residency, does it matter when in the year I purchase a Spanish home?
So this is a really simple question because the answer is no. I get this all the time. Like some people, they decide to buy a holiday home in Spain when they work in the UK, and then they want to retire at some point later down the line. So buying a Spanish home does not make you a tax resident. What's really important to understand is that for purposes of tax residency, the main rule is that you spend at least 183 days in Spain in any calendar year, which is the same as a tax year here in Spain. So it goes from the 1st of January until the 31st of December. So that's the main rule. And also, if your center of economic interest is Spain, you could be deemed a Spanish tax resident. Or if your spouse is a tax resident in Spain, or if you have dependent children, then you could also be deemed a tax resident because of that reason. Now, this used to be quite simple to determine before Brexit, but if you come from the UK and you need a visa, you have to be careful because with certain types of visas, there may be Spanish tax reporting obligations. So if you're coming down on a visa, this is just another good reason why you should seek financial planning and make sure that you don't become a Spanish tax resident unintentionally. So it's going to be planned, and it can be really important for certain transactions, such as property sales, for example.
Great, thanks, John. Question 2. I'm over age 65 and I've already moved to Spain. Will I be taxed on the sale of my UK home?
So this just follows on from the previous question, because one of the main reasons people want to time their move to Spain is that they don't want to be taxed in Spain on a property sale in the UK, especially to sell the main home, which in the UK you can sell tax-free. So the simplest way to do it, which works for most people, is that you sell in the UK in the tax year previous to the tax year you're coming down to Spain. For example, if someone sells this year and moves down to Spain next year, there won't be tax in Spain on it because they become tax residents in Spain from the 1st of January next year. But it can also work if you sell in the if you sell the second half of the year, then it can come down pretty much immediately, because if you don't spend at least 6 months in Spain, then you'll be fine normally. But then we get the Spanish visa rules that can come into play as well. So it's important that you seek advice before you take any transactions like that, because you need to look at Spanish tax liabilities. Other rules to be mindful of is that when you sell a UK property, even if you sell it as a Spanish resident, so you may sell it once you become a Spanish tax resident, you would still be taxed in the UK on the sale, or you'd be assessed on it in the UK, because it's a UK property, so it's always going to be assessed in the UK. And in the UK, it could be totally exempt if you lived in a property for the whole ownership period and you sell it within 9 months of moving down to Spain. Also in Spain, there's a rule saying that if someone is at least 65 years old, they've lived in a property for at least 3 years, and they sell it within 2 years of moving out, that sale can be tax exempt. And there's nothing in the Spanish tax law that says that the property has to be situated in Spain. So many foreign clients, including British clients we have, and their accountants in Spain take the interpretation that this could apply to the self-made residents in the UK. But obviously this is something that applies to certain people, especially people over 65. So if someone is under 65, wants to sell the main home, come down to Spain, one rule they can use is the reinvestment relief. So if you reinvest all of the proceeds from the sale of your main home in the UK and you meet the other requirements we discussed as well about having lived in the property for 3 years, etc., then you can reinvest into a Spanish home. But if you don't reinvest the full amount, you could be liable for Spanish tax on some of it if you've sold the UK main home as a Spanish tax resident. So it gets a bit complex. It's really important that you are advised for professional advice before you undertake any transactions like this, because the tax bill in Spain can be quite high if you don't do it correctly.
Right. Okay. Thanks. Question 3. I've got a UK share portfolio which pays me dividends as well as premium bonds. How will they be taxed in Spain?
So generally, what is tax efficient in the UK is not tax efficient in Spain and vice versa. So, for example, UK premium bonds and shares, they'd be liable to savings tax in Spain at 19 to 28%. There is no dividend allowance. So in the UK, you get a dividend allowance of £2,000 per person. You don't have that in Spain. And there's no capital gains tax allowance if you sell the shares. In the UK, it's about 12,300. It's gone down to about 6,000 recently, but in Spain, there's no allowance at all on capital gains. So it's not very tax efficient to own shares, for example, directly in Spain, because if you got lots of shares, it's lots of reporting obligations and are taxed on an ongoing basis as you get your dividends. So there are Spanish compliant tax efficient structures available for Spanish tax residents, and that's something that we happy to advise you on. If you're interested in looking into it, please let us know.
Great. Thanks, John. And question 4, are there any personal allowances in Spain to reduce my income tax liability?
Right, so Spain's got 17 autonomous tax regions with different rules, but generally there's a personal allowance of 5,550 euros, which applies to most people, whether you're down here working or whether you're retired. And then it increases with age, so it goes up to roughly 6,700 when you're 65, and then it goes up by another 1,400 when you're over 75. The income tax rates in Spain, which apply to, for example, pensions and work income, they are 19 to 45%, so they're quite high. And there are ways to restructure certain types of pensions for tax efficiency in Spain, so we can draw income from pensions in a much more tax efficient way at lower tax rates. So please get in touch with us if you have any pension plans that you're looking to draw on when you move down to Spain, we can look into options for you.
Great. Thanks, John. And the final question for you, question 5. I've heard that wealth tax has been abolished in some regions, but not all, and there is a new solidarity tax. I find it all very confusing. Can you explain the changes?
Yeah, lots of people are confused about this, even financial advisors. So, yeah, this is linked to changes that happened last year. This was around October time last year. That what we had previously was that wealth tax was abolished in Madrid a few years ago, but in most Spanish regions, and as I said earlier, there are 17 autonomous regions. Most regions applied wealth tax, and it kicked in at roughly 700,000 euros. In some regions like Alicante, it's 500,000. And there were 2 regions that decided to abolish wealth tax last year. It was Andalusia in the south, which is the largest region, and Murcia, which is linked to Andalusia. So they decided to abolish wealth tax, and they are run by the right-wing Popular Party, Partido Popular. And the socialist government didn't like that this was abolished. So just a few weeks after it was abolished, they introduced a new type of wealth tax called solidarity tax, which is really just another wealth tax with a different name, but it applies at higher thresholds. So the threshold for solidarity tax, which applies nationwide in all autonomous regions, is 3 million euros, and you get a 700,000 general allowance. It effectively kicks in at 3.7 million euros, and you get 300,000 euro property allowance per person. So effectively, husband or wife, when any couple moving down with assets, they can have about 8 million euros in joint assets and not be liable for the solidarity tax. But what's interesting is that it applies in Andalusia and Murcia and Madrid. So all these regions that abolish wealth tax, they will liable for solidarity tax, but at these high rates, whilst other regions that have maintained wealth tax, in those regions, you'd be liable for wealth tax from the lower rates, which can be around 700,000, but in some regions it's as low as 500,000. So it can be quite low. I mean, if you sold a property in the UK, coming down, you got some assets, a lot of people can come above that limit. So it's important to seek advice, because there are ways to reduce wealth tax in Spain using financial planning. So if you'd like to review it before you come down, and let us know, and we can give you some ideas on what you should think about before you move down to reduce the liability or get rid of it altogether, potentially by restructuring your assets.
Great. Thanks, John. You can have a break from answering questions now.
My time now to ask you questions. Yeah, so question number 6, Nicole, for you. I have a cash surplus from having sold my UK property before moving to Spain. Is it best to retain it in a UK bank or send it to a Spanish bank?
Yeah, I mean, I personally ask this question all the time, and I think it really depends on what your objectives are. For example, do you need the cash in Spain for your living expenses, or are you looking to invest it? And for living expenses, for example, people tend to prefer to keep the cash in their UK account, so then they can pick and choose when they transfer it across into Spain, depending on the exchange rate at that point in time. I think if you do that, using a currency transfer service is probably a really sensible idea as well, because the rates will be so much cheaper than if you transfer it directly from bank to bank. Especially with the Spanish banks, typically the fees here are higher than the UK banks. So then if you plan to invest it, no, you don't need to bring the cash into Spain. In fact, you could transfer it directly from your UK bank account to whoever the investment provider is. Just on this whole point, if you do have excess cash on deposit in a bank account, given the current climate, I just think there's a few things to be aware of. Firstly, things such as the Financial Services Compensation Scheme limits. That just means you're only protected in your bank up to a certain point. Obviously, we've got inflation is at an all-time high at the moment, which is therefore eroding the purchasing power of the cash. Plus, if the value of the UK bank account is greater than 50,000 euros, you would need to declare and report that to the Spanish tax authorities. So although it may seem like a simple question, I think it's really an area that does involve a conversation, because there's so many different variables attached to it.
Thanks, Nicole. Right, so question number 7. Will my children in the UK be liable to pay Spanish inheritance tax when I die in Spain?
Sure. So I know John and myself discuss estate planning all the time, because it works in the complete opposite way than it does in the UK. So Spanish inheritance tax is called succession tax, and it's due if either the beneficiary or the recipient lives here in Spain, or if the asset is physically based here in Spain. So, for example, if you have UK-based children and they inherit a Spanish asset such as a property, then because the property is located in Spain, yes, they will have to pay Spanish inheritance tax. Keep in mind there are allowances and reductions to help minimize the amount of tax that's due, but if they do inherit a UK property in this example, they will have to declare it and pay any tax within 6 months from when they inherited it. So I would very much recommend that they work closely with a Spanish accountant or lawyer at that time to do the declaration. There are actually ways to pass assets to your family in a really tax efficient manner that can completely avoid the Spanish probate process, and also completely avoid Spanish inheritance tax. And I think John mentioned it before, it's something called a Spanish tax compliant investment, because we set them up based outside of Spain. So if your children or your beneficiaries are outside of Spain and the asset is outside of Spain, that means there is no Spanish inheritance tax due. It also completely avoids the lengthy and expensive Spanish probate process. I just think it's quite a complex area, succession tax and estate planning in Spain, but just be mindful. There's a certain aspect to do with beneficiaries. If they're stepchildren, typically they won't receive any allowances and reductions. So if you do have assets that are passing to stepchildren, really careful planning needs to take place, because otherwise they can be taxed quite harshly here in Spain.
Thank you, Nicole. Right, question number 8. I've got a UK will in place. Do I need to set up another will in Spain now that I live here?
Sure. So typically, we would recommend that you draft a will in any country where you hold assets, because it will speed up the probate process. It's actually best practice to do that. And it's also important to ensure that they don't contradict one another. So you can have several wills in several countries if that's the way your assets are distributed. So if you have assets in the UK, you should have a UK specific will that will just cater for the assets there. And the same here in Spain. As soon as you have a property or any assets here in Spain, you should have a separate Spanish will that will just cater for the assets here. In Spain, you can go directly to a notary, or you can use a lawyer to draft the will as per current legislation requirements. And they will also ensure that the wills don't contradict one another, which is really important as well. And obviously they'll make sure that it's tailored to your specific individual circumstance as well.
Thanks, Nicole. Question number 9. I'm age 52 and would like to move to Spain. However, I have a pension pot with a 25% pension commencement lump sum, not yet drawn, as the minimum age is 55. What will be the tax implications of moving to Spain this year?
Okay, so in short, there are no tax implications. When you move to Spain and you hold a UK pension, in this example at age 52, also because you can't actually access the pension because you're 52 and pensionable age in the UK is 55, you shouldn't even need to report the pension to the Spanish tax authorities. Just keep in mind this, what's called a pension even commencement lump sum. What that means is you probably know that as the 25% tax-free lump sum. That's a UK tax rule. So you can withdraw up to 25% of your pension, but it's only tax-free in the UK and it's fully subject to income tax in Spain, which a lot of people unfortunately don't realise. So just be mindful of that. I think in general with pensions, there's just so many options to consider. So you definitely, I would recommend to seek advice well before you reach your retirement age. So then you can just make sure your pension's in the best possible position for where you're resident and what your objectives are by the time you reach pensionable age and when you're looking to start to take an income from the pension.
Thanks, Nicole. Well, we just come to the final question, and I just noted there are no questions in the chat yet, so feel free to write the question you have on the chat, and we'll just pick it up after this question. So I live in Spain, and I've got a UK pension worth £2 million. I've seen that the UK budget has effectively abolished the pension lifetime allowance from the 6th of April this year. Does this mean that it's best to leave my pension pot in the UK?
Sure. Okay. So there's a few, I think there's a couple of different parts to this answer. So previously, events such as transferring your pension abroad would trigger a test against the lifetime allowance in the UK. And that generally was a tax rate of 25%. When the pot was worth the lifetime allowance, which was just over £1 million. So in this example, if you had a pension pot of £2 million, that means you would have had a UK tax bill of £232,000 just on that pension transfer. However, following the new rules, which were announced in the budget a short while ago, I think what's best for you and the pension really depends on so many factors here, and you really do need advice. I know I said that before, but pensions especially, it's a really complex area of financial planning. So I would recommend the first step is for us just to look under the bonnet and to look at the mechanics of what you have and how it works. So an analysis exercise would be the ideal first step. Also on that point, there is actually a window of opportunity for individuals in that position to transfer the pension out of the UK, of course, only if it's feasible, because the UK Labour Party stated that they would reinforce the lifetime allowance if they were re-elected. So in this position, some individuals, when it makes sense, are actually transferring their pension out of the UK, whilst there is no lifetime allowance, just to take advantage during that window of opportunity. Sorry, I know I've been letting people into the webinar as well at various times, just to say, if anybody's missed any elements, please don't worry, because we will send a link for the recording so people can watch it at their leisure and in the full duration.
Thanks, Nicole, and thanks to everyone who are watching. We hope that these questions and answers are interesting and useful to you. And we've actually, I can't see any questions in the chat, but this is quite normal because normally when you have a webinar like this, people don't ask questions because they may have something very personal they want to reach out to us individually and ask. So feel free to do that. After the webinar, you have our contact details on the screen, and everyone who registered for the webinar will get a recording as well. So if you join late, don't worry, you can just watch the recording. You will get it very soon by email. So thanks again, and we hope that you will reach out to us and allow us to help you individually, because everyone are different, everyone's got different objectives and different circumstances. So we'd love to hear from you and help you out in person. So anything to add, Nicole?
No, you were very comprehensive, John. Thank you. And I just
Right.
thank you from me as well. It's been a pleasure.
Cheers, everyone.
Thanks. Bye-bye.
Bye. Bye.